Hi all, I wanted to make a quick video regarding my search for one trade a day only, which I've been working on for a long time. The idea was to somehow find a strategy where we take only one trade a day. So let's discuss on that topic. Before I begin, I would just like to mention that this is an educational channel. All views expressed over here are only for education purposes. So please do not make or take any financial decisions based on the views expressed over here. Kindly consult your financial advisor before you make or take any financial decisions. Also read the disclaimer below. With that said, let's proceed. So guys, this video is more of an open discussion. I want to show you my findings and I want you to write down your findings once you work on what I am showing you in this video. All right. So this is not what I think is good. This is what I think one should work on to try and achieve one trade a day only kind of a scenario, because the transaction charges are quite high. And if you end up taking multiple trades, then the transaction charges, the brokerage and stuff accumulates, and it's no use. And then if you do trade below a certain quantity, uh, it just does not make any sense. So the idea was to strike a good trade and then just take that one trade a day and get over with it. All right. So let's see how we can approach it. In my view, one of the best ways to approach this, or I think one trade a day can emerge only from study of moving averages, whether it's simple moving averages or exponential moving averages. So it has to emerge from some sort of a moving average. That is my general thought process. Whether it can come up from some other theory, I do not know. So far I've been working on exponential moving average and I want to show you my findings. All right, I've tried multiple uh, permutation and combinations. I'm not able to better it than the one I'm working on right now. If you can better it, please mention your findings in the comments below, what your sequence will be and what time frame you will use it. I'll show you my findings and you can mention, work on it and show me your findings. All right, so let's begin. So this is how the scenario would look with the indicators on. I can even turn off this pivot for now. So this is how it look. As you can see, this green coming turns into red, and this seems to be a perfect catch. And we catch this whole swing. So this would have been the trade on 22nd. This would have been this, or this would have been the trade the day before. It is not a perfect catch, but the day before that, we again have a perfect catch. It's when all the moving averages that I'll discuss in this video merge, and you get this one good trade in that day. Again, here, the finding seems to work. We are on a we can shift to a 3-minute time frame. So my current formula will work on 3, 4, and 5 minute. All right, guys. 3 minutes seems to be the best. So work it out according to what you want. So 3, 4, and 5 minutes, my current formula will work. So again, we restart. Here it seems to have caught spot on. Here, so. At least you would have not made a loss here or here if you would have taken that trade. Here it seems to be spot on, a little early actually, it's catching it. Here again, it seems to have caught it. Even though the color is actually the other way around, but emergence has been shown over here, and over here, again, it has caught the downtrend. The idea is to wait for the color change, the spot where the color changes. Here again, you catch and ride. Here again, you catch and ride. Over here, you could have shorted here and taken this. Over here, you could have shorted this and taken this whole ride. So as you can see from this chart, we are looking for that one trade. You grab a certain amount of points and you're out, and you just step away from your system. Here again, we seem to have caught it spot on. All right, and taken this whole ride down. Right? So how do we arrive at this? So my findings are, let me start and show you this brand new. We'll create a new layout. We will remove all indicators. We are in the Nifty Bank right now. We'll move to the 3-minute time frame and we will type an indicator called EMA cross. All right. If you click on this EMA cross by DMark 165, you have this thing come up on your screen. All right. Now we'll go ahead and put in the values. The first thing is, let's just get rid of a few things. I don't need these crosses. I don't need these crosses. I don't need these crosses. I don't need these labels and values at the bottom. All right. We'll again come to this page once again. And then we need to go to the inputs. So what are the inputs from my previous inputs? It is 5, 8, 15, 32. So EMA 1 will be 5, EMA 2 will be 8, EMA 3 will be 15, EMA 4 will be 32. All right. 5, 8, 15, 32. So let's put in that over here. This will be 5. This will be 8. And this will be 15. And this will be 32. Right. That was the formula. Let's just see. 5, 8, 15, 32. Yes. So we have got 5, 8, 15, 32. 5, 8, 15, 32. Over here, I think I've chosen the wrong cross. Just hold on. Just hold on. This is okay. What else is working over here? Anything else? Then why am I not getting this line? Okay, cross 2 needs to be a line. Okay. So, correct. I was in the correct thing. This cross 2, we will change from cross to line. There, we get it. And then we'll just separate the days so that we know sessions break. We know which day has ended where and which day has begun where. That's it. So once you do this, you will see that you are able to come to the exact spot where all the exponential moving averages merge, get squeezed, and then boom, it goes the other way. In fact, if you could reverse these colors, you will find that it looks a little more appropriate. Just hold on. So I'll make this green red, and this red, I'll make it green. Yep. Perfect. It looks spot on now. It was showing us the colors in the reverse way. Now it's showing us the spot on way. So guys, if you look at this, on this day, this would have been the spot, right? Over here. Let's just see if I can highlight that. This. Over here, this would have been the spot. The short. This would have been the spot to go long. This would have also been a spot to short. It gave you like 3 chances on that day. Over here, this one trade would have made you great money on that one day. Just one trade a day, guys. Just one trade a day is what we want. We don't want to take multiple trades a day. Here again, this spot, one trade, that's it. Here again, it was a slow move, but a definite move. One trade. This is one trade. Just that one trade. Perfect one trade over here as well. Another perfect one trade over here. Another perfect one trade over here. In fact, the short also is a perfect trade. Another perfect trade over here. 1 second. We have another perfect trade over here going up. Wow, we have another perfect trade over here. Okay, spot on. We have another perfect trade over here. So guys, let's not go on about calling it perfect trade, perfect trade. So even if I have to say that the ratio is not 100%, it's about 75-80%. Even if it's 75-80%, it's a good ratio. Now, whether this is only showing up in back studies, whether it'll show up in real time, I don't know. I'm working on this. As I said, this is going to be one of my videos where I would welcome a lot of comments from everybody showing their findings working on this formula with 4 EMAs. And so study this, guys, and let me know if you can better this 4 numbers than me. Time frame also is important, so you got to find the perfect 4 EMAs along with whatever 3 to 4 minutes or 5-minute time frame that you think it will work on. And the idea is to just do one trade a day or not to trade at all. If you don't find a trade, then don't trade. Like yesterday, I think it's struggling to find a trade. Don't trade. The idea is to take one trade a day or not trade at all, but not to take trades that you unnecessarily go and lose money on. All right. So the idea is to decrease the number of trades you take in a day or in a week or in a month, and whatever you take, you make small profits or big profits. Does not matter. The idea is to eliminate losses. You can also take a small loss, but the idea is to eliminate a big loss. So we want to make our probability of winning higher. That's it. The whole purpose of this video is to avoid multiple trades and to make our chances of making a profitable trade higher. All right. So guys, I'll re-summarize this. This is the setting once again. In our EMA cross, EMA 1 is at 5, EMA 2 is at 8, EMA 3 is at 15, EMA 4 is at 32. And on style, everything over here is checked. Cross 1 is unchecked. Cross underscore 01 is unchecked. Cross 2 is checked. And we have changed that from star to a line. Cross underscore 02 is unchecked. Labels on price is unchecked. Values is unchecked. All right. And this is the net outcome so far. So please study this a couple of times. Let me know your finding in the comment section below, whether you think this is the right approach or not. This is a very debatable video. I'm trying to show you what I have found working on this. You try and show me your findings. Or you think that we should forget about EMAs and moving averages altogether and there is some other formula to come to one trade a day strategy. Let me know. Write in the comments. All right. The idea is to come down to one trade a day and only take one trade a day, which is small profit, big profit, no problem. Small loss also is no problem, but we want to just avoid a big loss. All right. So that on a monthly time frame, we are profitable. All right, guys. So I hope this video was of some help to you. If it was, then kindly like and subscribe to our channel. Subscribe to us on Telegram as well. The link is in the description below. Share this video with your family and friends. And I'll see you in another video. Take care. Thank you very much for watching. Take care. Bye-bye.